Happy Friday, boys and squirrels. We're here to talk about some fresh real estate Gig Harbor data. I said that backwards, but whatever, you get the point. Yes, we're talking about October data. It is November now. Happy November. Now, before you unloosen your belt buckle to make room for all that pie, desserts, and eggnog, let's go over some data. Let's see what's been happening as our market continues to cool down here. I'm sure you've heard, if you haven't been living in a rock, real estate has been slow, and Gig Harbor is no exception. So we're going to be looking at what has happened in October and if October is different than years prior. So let's take a look, and hopefully short and brief this time, and I'll try to speed things up so that you can go back to whatever you're planning to do on your weekend. So let's get going. On my screen here we have the Northwest MLS data. This is for the entire MLS, but we're going to be interested in Gig Harbor, Washington here. Residential specifically. You can search by condos, vacant land, farm and ranch. We have a lot of those, and manufactured homes, but I like to do residential and previously owned. I don't like to include new construction. It skews things just because the way that builders are currently. All right, so okay, that all pans out. Then we're going to do rolling 3-month data. We can do 3 years, 5 years. Let's do 5 years. Really put us into perspective of where we've gone and where we are as we look at half a decade here. So here we are in October. This is our latest data. If you can't see that, it says $750,000. It is the exact same as the month prior, September, at $750,000. So prices remain flat, and it seems like we're pretty much mirroring last year's data. I mean, yes, there was a more healthy peak here. We didn't have that peak, but we are stair-stepping down as we are going into probably January. So November, December, January kind of continues to slide. So I imagine that this slide will continue. We'll probably have our median sales price, bottom out here towards the $700,000 range. Nothing unheard of. No price crash. Sorry, bears. I think it's just seasonal cycles. We'll go back to 700. Meaning that prices remain flat for the year, meaning that we've had a small correction in prices, basically saying that inflation has been eating away at the purchasing power in said homes. So you lost whatever, 9%. No, it's officially down now, but it's been a whole year, so let's just say 9%. So that is, if you ever hear the term stealth crash, that's prices being down, let's say 9% in real terms. Year over year versus nominal prices have remained flat. So we see that spelled out here. Month over month they're flat, and October of last year they were also at 750, so we're flat across the board. So that's in terms of prices. So we expected that. If you've been watching this, you would have expected this. So let's look at our next item. All right, we're gonna pull up new listings here. We're gonna look at monthly data because it is interesting looking at the monthly data. So 59 homes were listed in October. So that's, let's say, 2 a day. So that's down from month over month. We were 75 houses last month, sorry, and we're down sub 60s now. This means that October is carrying the banner for record low listings. If we go back in history, we can see last year we had 74 at this time, 76, 90, it's like, wow, 78 and 80. So just judging by the last 5 years, between 76 and 90 houses in October compared to less than 60, which is not so great, but it's expected. Again, people don't want to move, and they don't have to move yet. So low amount of listings, and those listings, if we look at seasonal trends, will continue to drop off in November and December. Here we go, November, December. So December will probably see the trough, and new listings will probably hit, I would assume, again, in that sub 20 range. Well, what I've been researching is it seems a lot of realtors across the nation are saying wait until spring to list. Things will probably improve by then. Just wait. So all the people are, okay, we'll just sit here pretty and wait for spring. What could happen in spring is if everybody lists nationally, I don't know if it's going to affect Gig Harbor as much, but having all the supply come on the market at once, just because all the realtors are telling their clients to list in spring, might actually bring prices down, as there is some competition that will spur either concessions or price reductions to appeal more to the market. So that might be an interesting dynamic. That's why I'm more comfortable saying what's going to happen to the end of the year. Come January, it'll be more of a let's update my forecast then. So yeah, I think we're just going to follow the trend here, go into December. Not a lot of new listings. All right, let's look at how fast houses are moving in Gig Harbor. We're going to be looking at, well, let's do rolling 3-month data for now, and then I'll show you a little bit of a weird thing that's going on. Anyway, here we have, it's taking about 2 weeks for a house to sell currently, the median house to sell in Gig Harbor. I mean, we had a $8.5 million house, which is, I think, the second highest here in this area, sell in like a week. So, I mean, there is still demand for high-end homes, especially since the waterfront, there is people with a blank check waiting for the right house to come on the market. So those houses are still moving quick, but the median house here is 2 weeks. So what's interesting, when I did do the monthly data, it's we had a sharp drop here from 21, which was 3 weeks, to 1 week in October, which was interesting. So when I did look up what's been happening there, let's do 1 through, so we are 1 through 9 typically, but we don't want to include KP South because that's not part of Gig Harbor. And let's do everything that's been sold. So this is data that's been sold, not pending. So none of these houses in this data set are pending homes, they're just sold. And so when we order by CDOM, which is consecutive days on market, or cumulative days, we see a bunch of zeros, so 0 days on the market. These are unlisted, so these are basically sales that happen between buyer and seller without going on the MLS. But the rest here, you still have 0 days for some certain homes that are on the market for less than a day. And then you have a bunch that are sub 10 days on the market. So let's do 50, boom. So these are all the houses that sold in October. You can see that 27, well, if we exclude the unlisted ones, out of 44, so let's say 24 out of 44 sold in less than 10 days. And that, I mean, some of these sold 200 days. But as you can see, the median is really brought down by the fact that these houses are turning over very quickly. And I think that's what's bringing down this data. But it's also because there is such low inventory that any sort of data point that comes in such a small market does skew everything heavily. Okay, now for inventory, let's talk about this real quick. We're currently sitting at 2.2. What does that mean? Well, inventory measures how many days it would take to sell through our entire inventory if not another house came on the market. So it would take 2.2 months to sell all of our existing inventory. That's gauged on buyer and seller, dynamics. So we're exact same as we were last month. Year prior, we have technically higher inventory, even though we have a lower amount of listings, just because there's fewer buyers. We have the exact same as we did in 2019. So even though we have the same amount of inventory, does not mean we have the same amount of houses. It's just it shows the buyer and the seller demand, and they're about equal as they were in 2019. Okay, so hopefully that made sense. But it's just good to put us into perspective and historic buyer and seller demand. Okay, now for we'll do percent of price last. Let's do foot traffic. We can do shows per listing. Shows per listing are down. Let's do monthly data. So October we had about 4 showings per listing, which is pretty weak. Okay, there's a trash truck. Sorry if you hear that. During COVID years we had 15. So this is just a steady. This doesn't even count open houses, right? This is just people that actually booked listing showings to your house. So we've come down substantially from COVID, and then in spring. This data set, even though it says 10 years, I don't know if you can see the 10 years, but it only goes back to 2019. So a lot of this data is just skewed because it says in 2019 we only had 2 showings per listing. So I don't know if I believe that. So anyway, this data is more accurate. We're down 0.4. So we lost half a person coming through your house. And this is down from the spring when we had twice as many lookers per listing. So yeah, but this goes down until November, and then as people spend a lot of time on the internet because of the dark and gray and wet weather we're having, and people start looking at bonuses and they want to relocate and new job offers, I think this is when it really starts hitting the ground running here in December. People start prepping themselves, looking at what's on the market, and then boom, they're ready to go here and just touring, seeing what's on the market, and then buying as the rest of the spring season happens. So here for original price and list price. List price, okay, the best way to explain it is if somebody put their house on the market for $1 million, didn't get any interest, reduced it by $100,000, so it's now $900,000, and they sold it for $900,000, it would mean that they get 100% of list price. So compared to original price, this would then instead show 90%, that they got a 90% of their original price. So that's the difference between the list price, which is usually more 100% here as people do price reductions, and then a buyer comes in and says, hey, I mean, that's more of a fair price. Original price is a better way to see how sellers react and how buyers react to the price of houses throughout the year. What I find interesting here in October, we're at 99.7% of original price. I think that's, the reason is a lot of these houses that sold under 10 days had, well, let's say under a week, had higher than, so let's pick this one. Let's see. So for example, here, this one was on the market for 2 days. The list price was $715, sold for $720. This means it would be higher than original price. So I think a lot of the homes that sold really quickly, and there were a lot of them in October, caused this to jump up. Because historically, we look in October and we see 98% of original price. And that continues as we go towards December. And then we have more 100% ranges here towards the spring market. But it's interesting that we kind of broke this historic trend just by the fact there's so few listings. So there's still, you know, the right price, the right house will get much higher, or not much higher, but I mean, I saw 10% over asking, which is quite incredible for the fact that, you know, buyer demand is so slow. But it also shows Gig Harbor is still a desirable area and people are overbidding on a house regardless. So that's just, I want to talk about that, just what I'm seeing in the market. I think that does it for me. I don't think there's anything else really dramatic that I covered. I think we covered basically everything. Percent of list price. Okay. So, yeah, that's it. So thank you for watching. Yippers. I'm just gonna hang out here for a while.